Hello, Dave Schiller, Aegis Wealth Partners here. I'm the founder of the company. I am a certified financial planner. I'm an enrolled agent, and I also hold a few designations in both college planning and in student loan repayment. As we're getting into college planning season, I wanted to talk about a couple of education tax credits. Um, the credit that I want to talk about in this particular video is called the Lifetime Learning Credit, or LLC, and I want to go over what it is, how you become eligible for it, and how to claim it. Okay, so the Lifetime Learning Credit, or LLC, this is a non-refundable tax credit. So if you'll recall from the previous video on the American Opportunity Tax Credit, that was a partially refundable tax credit. So this one is not refundable. And what that means is that you have a maximum annual credit of $2,000 per return. So we're getting into some differences already with the AOTC. So if you are able to claim the full $2,000 tax credit on your return, let's say that you only have $1,500 of tax, then you can reduce it by, you'll reduce your taxes by $1,500, but you will not get the remaining $500 back as a refund. And recall from the AOTC video that is partially refundable, you can get up to 40% of that tax credit back as a refund. The other thing here that differentiates the LLC from the American Opportunity Tax Credit, again, is that this is $2,000 per return, so you can use this one time per year. It's not per student. One of the things that makes this a little bit more flexible than the AOTC, however, is that you can use this for any number of years. You can use it for all the undergraduate years. You can use it for graduate school, professional programs, whereas with the American Opportunity Tax Credit, you can only use it for the first 4 years of undergraduate studies. Now, again, these are going to be similar to the AOTC. You have to have paid qualified education expenses, but it does not need to lead to a degree, certificate, or some other type of credential. Again, that's a big difference from the AOTC. And also, you cannot claim both the AOTC and the LLC for the same student in the same tax year. But if it's two different students, you can claim each for either student. So AOTC for one student, LLC for another student, same tax year, totally fine. So the eligible institutions, now this is going to be the same as the AOTC. It's going to be mostly your public and private universities and a number of vocational schools or other post-secondary institutions. The big thing here is that, like the AOTC, these institutions need to participate in the federal student aid program, which is administered by the Department of Education. So the tax credit, it's very simple. Again, different from the AOTC. It's the first $10,000 of qualified education expenses, or QEE. You get 20% of that. You're able to claim that. So what is a qualified education expense? It is going to be tuition and certain other expenses for attending that institution. This is different. If there are books or other course fees, they have to be paid directly to that institution as a requirement for attendance and enrollment. So if you have to buy the books from them to attend that school, that's something that's important. So if you buy the book somewhere else, it won't count as a QE. And these last points here, again, very important. They are the same as the AOTC. If you take out loans on behalf of your student, if you have gift money, if you have any inheritance, grandparents that want to chip in for college, that is acceptable. You can use those payments as credit for qualified education expenses. But what are not qualified education expenses? Again, it's pretty similar to the American Opportunity Tax Credit. Room and board doesn't count. no transportation costs, insurance or other medical expenses. And again, if you're using 529 plans, scholarships, grants, employee tuition reimbursement, any of those sources of funds, they will not count for a qualified education expense. So you can't use them. You'll have to back those numbers out. And again, the income phase out is the same. It's $80,000 for a single person. $80,000 to $90,000 is your phase out. So $85,000 if that's your MAGI and you qualify for the $2,000. Since you're in that midpoint, you're gonna qualify for $1,000 for the LLC. Above $90,000, you cannot claim the tax credit. Married filed joint, you see the numbers, they're exactly double of the single filer. And as with the AOTC, if you are married and filing separately, you cannot claim any of the education tax credits. So be aware if you're doing some sort of more advanced type of tax planning and you're a married couple filing separately, that you will not be eligible for any of the education tax credits. Again, you're going to receive a Form 1098-T from the institution. If you don't receive one, because they don't have to send it out, then just make sure you're able to substantiate your expenses. You'll also need the institution's EIN. And then if you're using some sort of tax prep software or using, say, a CPA or an enrolled agent to file your taxes, they'll help you with the needed form. It's the Form 8863. This is for the education tax credits. And this is, I think, a really important piece for families, especially when you're going into the first semester, so the fall semester, and your student did not attend in the spring. If you've made any payments that are qualified, say in 2023, they are eligible for the first 3 months of the following year. So if the student is not starting university until, let's say, January of 2024, but you make some payments in October, November, December 2023, as long as the semester starts in 2024 in the first 3 months, then those are going to count as eligible expenses. And again, if you're married but filing separately, you cannot claim the tax deduction. And if your student is also paying for some of the expenses, but they are claimed on your tax return as a dependent, they are not able to claim the tax credit for themselves. So likely it's going to be you, but it can't be both if they're a dependent. And so that's it. It's just a quick short video on the second education tax credit that I wanted to discuss. We're really starting into tax planning, or tax and college planning here in the fall. And so I wanted to get this information out to those of you that are interested in making sure you're doing the right types of planning for college, that you're able to claim the tax credits as they become eligible for you. So, but if you do have questions, I know taxes can be a little overwhelming for some, and certainly it's a confusing topic. But if you have any questions, my email is there. You see my phone number. You can also go to my website and reach out to me. Happy to talk and walk you through some of this information, or maybe other questions that you do have. So I hope you found it helpful. And if you want to make sure that you catch any of the videos coming up in the next couple weeks and months, hit subscribe, because not only do I do videos on college planning, I'll be doing more on student loan repayment, because that's coming up real soon after about 3.5 years of payments not being required. So we've had a national forbearance during the pandemic. I also do be doing some tax planning videos as well, Roth conversions, other types of things like that. And so if you want to make sure that that you catch those videos as they come out. Hit subscribe. In the meanwhile, thanks again for watching. We'll catch you on the next video. Okay, take care.